Hello friends, welcome back to the channel, and in today's topic we are going to discuss whether the market is overvalued. So let's dive right into it. So first of all, why I decided to actually discuss on this topic, because I saw that there's a lot of recent news regarding about the AI bubble, saying that if actually this article, the GIC investment officer warns of AI bubble because they are talking about if the technology doesn't catch up and doesn't deliver as per the high expectations that the market is pricing in, we are actually in for a bubble. So there's a lot of talk whether market right now is at its peak, and maybe in terms of correction, whether is it coming. Let's discuss on some of the crucial key factors that I think that it might be worth taking a look. So these are the few pointers that we're gonna cover today. So the first thing itself is the S&P current market valuation and the 10-year Treasury yield versus the S&P 500 earning yield. And the third point itself will be the earning margins, seeing whether companies right now are actually really earnings. And fourth, forecast what is the market actually feeling right now, and the overall fear and greed index. So taking a look at this current market for SPY, we can actually see that the market right now is actually very strong. And especially after April, this was actually the Liberation Day, and we have been seeing a run up since May till October. So market right now is actually at the all-time high at 669 points. So for the 10 years Treasury yield, we are looking at the current yield of 4.12%. So why is this important? Because generally when we want to invest, we want to find out what is the risk-free rate. So for a 10-year Treasury yield in the US, if it is paying 4.12%, what happened is if the stock market is only giving a yield that is lesser than that, then might as well you actually just buy a bond, which is safe. So the 10-year Treasury yield right now is at 4.12%. And today's for the SPY, which is the total US market, the top 500 companies, the forward earning yield as of now is actually at 4.15%. So you could have seen that the equities risk premium basically is taking the forward earning yield minus the 10 years Treasury yield. We still do have a positive 0.03%, but basically what it means is that it's going to be much harder for you to find companies that are cheap. You may have to put in a lot more work because this means that the market is currently fairly valued. But looking at the earning margins, in order for the SPY to keep on increasing its valuation, the most important thing is earnings. Because if let's say companies are earning money, valuation itself will definitely be richer. And if we are looking at this document that we actually got it from FedSec, it is interesting to note the net profit margin, right? Basically, the projection is still pretty high. Everything is still above the 12%. So the Q2 results was actually up. I think the Q2 earning yield was at 12.8%, which was great. And at this point of time right now for Q3 2025, I think that we don't have the data yet. And projection right now is at 12.7. So looking at this data, as long earning yields still keep on continue to be above 11%, likelihood itself, the market will be still very robust. So for the S&P 500 earning margin as of today right now is still at 12.22%, which is still at a pretty good rate. So looking at the analyst forecast, right now I think the interesting news on this article is this. So you can see that the analysts increased the EPS, the earning per share estimates for the S&P 500 companies for the first time since 2021. So generally, analysts will be more conservative coming close to the quarter, but however, this time round they actually increased the earning per share estimate. This is actually a very good news, and especially if you think about the concerns that the market have as of now, inflation, tariff, basically have they really lowered the estimates? No, not really. So as you can see in this article here, the answer is no, they actually did not lower the earning per share estimates. And in fact, during the third quarter, analysts increased the estimate slightly. So this is something bullish and positive, which also means that there might be some more upside for the market as of now. So the next part itself will be the fear and greed index. So we are in this current market valuation that right now the sentiment of the market is neutral. We are not in the extreme greed phase. So if let's say today's market, we are at the extreme greed phase, what I will be feeling is that I'm going to be very careful. But as of now, market right now is actually on the neutral end. So seems like there is still some more upside to the market. So what do I think? So a few things over here. I believe that the market actually still has room to grow. So why is this so? Because right now I see that with analysts still projecting with slightly positive forecast on the earnings, and with earnings right now at a healthy above 12% yield, market fundamentally does not seem weak. So that is the first thing. And the second thing itself is, but I have to agree that it's going to be harder to find great opportunities. With the equity risk premium almost near to zero, you would have seen that most of the companies in S&P 500 are priced very richly. So there's going to be more digging that you have to do in order to find companies at a great valuation as of today. But market do not go up in a straight line. So have you seen on the chart earlier, S&P 500 basically just went up all the way since May 2025. So we don't expect market to go up in a straight line. So pullback is expected. That is something that you need to take note of. And hence, I'm actually preparing my cash for any pullback. I'm not going to chase the market as of today. Basically, meaning I wouldn't go and put in like new positions to chase the market because the market is going higher. Likelihood more of preparing my cash, or maybe liquidating some low conviction ideas, preparing the war chest so that if let's say the market pullback, I do have some funds ready to purchase at that point of time. So this is something that I'm planning currently. And the fifth thing over here is my long-term investments is going to be staying invested. I will not sell and then go and buy back again. I believe that there's no way to time the market perfectly. And sometimes when you sell off the stock, you might not be able to purchase back the stock at the price that you want. So long-term conviction ideas are going to stay, not going to do the sell and buy thing, but more of preparing the cash. If there's any pullback and good opportunities, I'm going to utilize my cash for that. Alright, so that will be all for today. And if you have enjoyed this video and would love to have more videos like this recommended to you, do hit on the like and subscribe button so that more videos like this will be recommended to you. And if you would like to calculate on your progress towards retirement, I do have a free retirement calculator in the link in the description below. Once you sign up, you would have gotten an email for the free calculator, which I will share weekly insights on wealth building and lessons I have learned along the way about money. So that will be all, and I'll see you in the next video. Bye bye.